Good evening and welcome to this edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I'm Will Ibong. But first of all, let's check out equities performance for this week on the NGX. We see the Nigerian stock market closed the week in negative territory, with the all-share index falling 1.21% to 229,240 points, as we saw broad-based profit-taking that weighed on investor sentiment. And despite this decline that we saw trading activity that improved during the week. Investors traded about 3.82 billion shares, what about 154.4 billion naira across 258,567 deals, indicating we'll see sustained market participation there. Now, all sectoral, that's the major indices that we track, they closed lower. Industrial goods, that led losses, that was down 4.93%. That was followed by oil and gas, banking, insurance, consumer goods, all being bled in the market. Well, on the gainers chart, we see Airtel Africa surging 21%, while Regency Assurance and UPDC, they also posted strong gains. Let's look at the top losers in the top three charts. We see International Energy Agent Insurance, but that closed down, leading losses for the week. The biggest losses are the McNichols PLC University Press, also featured on that list. Now, for top trades, Sterling Financial Holdings, Access Holdings, and Ikeja Hotel, we saw them emerging as the week's most actively traded stocks. So the week was really bloody for a lot of investors who lost so much money. We saw market cap for about 25 suit companies declining 145 trillion naira. That's a big one. May, we saw them up 133 trillion in May. Now in June, 133 trillion, they were up 145 trillion in May, and that's about 8.21% down within 1 month, just in June. Telcos, cement manufacturers, we know that they were the biggest losers there. But let's bring it home now. We have two guests tonight. They read the market differently, very differently, and I'm counting on that because we need to diverge in views today. Idika Aja, senior analyst at Nairametrics. Idika, welcome.
Thank you very much, Will.
And also we have Israel Adebomi, is a senior investment analyst. He's head of investment banking at STL Capital Advisory. Thank you so much for joining us.
Thank you very much, Idika.
Okay, so let's just start with the numbers. Let's hit it right there. We see H1 2026. That was down. With a lot of losses for 2026. The numbers first, all share index. Let's have a historical there. We opened January at 156,000 points. Closed June to 28,000 points. That's a big one. It's not a loss if we look at it holistically. Again, of 45.95%. The market gained about 46.6 trillion, created that amount of money during that period in the half year, in space of 6 months. Oil and gas, that led that performance, 90% up. Industrial goods up nearly 80%. The market, we saw in May, they crossed the 250,000 points for the first time ever. Then June came. We all know what June means for us in the NGX. 13.29 trillion naira was gone in a single month. And that's the largest monthly loss we've seen recorded on the NGX ever. Now, year to date, from looking at year to date, we are in May for about 60%. In June, now we're about, say, 44%. That's in 4 weeks. In space of 4 weeks, we've lost a lot. So, Idika, I just want your verdict here. H1. What did the market actually tell us?
Well, thank you very much. If you look at the market, well, let me come from this angle. It's good to look at H1 2026, but what happened in H1 2025. If you come from that angle, you know that actually the stock market didn't do quite bad like that, as we really put it.
Okay.
In H1 2025, of course, the all-share index did about around 29%, and now we're having 47% as at close of H1 2026. Though at least we really mentioned, we suffered a very strong hit in June. That's losing about 13 trillion. But I would like to come from that angle, at least comparably what happened in 2025 and what happened in 2026.
Okay.
So I think it's still strong. But the full year we did 51%, and now we are doing 47% in H1 2026. Well, the most important is what actually drove that. The decline, especially in June. You know very well that people are taking profit. So if I had moved in, you are taking a position in January of course, despite the drop in June, you would have at least made about 45%.
Okay.
Maybe if you are taking a position, maybe towards the end of May, of course, you would have lost. But all hope is not lost. At least we'll see what happens coming into July. Of course, you mentioned we've seen it drop marginally in July. That's the first week compared to what we did in June. So, but let's see. The issue is this: people are when you have too much demand, you don't have supply.
Okay.
Of course, it will affect the market. People are keeping, especially these foreign investors, they are keeping money waiting for the IPO of Dangote.
Okay.
So, and equally, the pension has been given a go-ahead so that I can easily invest. So, you have that weight. So, when you have that short in supply, but you have demand, of course, it will affect the market. This thing is about market dynamism, demand and supply issue.
Definitely. So, Israel, same market, different lens. So, you're coming from. Do you see what Idika sees?
Yeah, absolutely. I mean, just to resound some of the points he's made, and that you also spoke to very briefly as well. It's been up from the start of the year, and then at June it then declined, right? Because I'm just looking at the trend. My sense is, folks in the market, particularly, are trying to take profit and sort of try to account for their books as of H1 2026, and then what's more interesting is going into H2 of 2026, particularly given the number of reforms that we're expecting. I know we'll get into that in detail later, but there are a number of changes: the T+2 conversion to T+1, as well as the FTSE revision, right? So all of that, I think, is what market participants are sort of watching out for H2 2026, and then the performance of all of that will determine how the market tallies in terms of the second half of the year. So my sense of the reason for that, for the decline, is just because folks wanted to take stock, basically, like traders in the market wanted to take stock for the first half of the year. And something that was put into consideration as well is the performance of the bonds. That's the fixed income market as well, because that also affects how the equity markets play, right? So, we've seen the CBN had the DMO keep on issuing bonds. I think last one, was over 1 trillion naira in bonds, and the rates are quite attractive as well. So some investors are also taking positions in the fixed income market. So basically, withdrawing their money from the equity market and putting that in the fixed income market. So
looking at, just staying with the equities market, was this decline, was it a broad-based one, or was it just narrow? I just want your thoughts on that.
I think from my understanding, it was largely broad-based. I know the market, the sector in particular that witnessed even growth despite all other sectors coming out was the financial services sector, largely the banking. So the banking still witnessed some rise in that, which speaks to the fact that investors are aware and are trying to also sort of play along all that lines. Tallying with fixed income, right, but still keeping it to equity. So my sense is broad-based, but you need to then take out the banking sector as an outlier.
Well, looking at the suits, it's about the suits lost about 11.97 trillion in the month of June. That's a huge one. In terms of market value, we know that it's steep losses for them there. So speak to us about what's happening. Idika, I just want to ask you this one. Speak to us about what's happening in the suits and the markets. Are they no longer, say, defensive stocks, especially when we have this new reclassification? But I know that has not started yet. But in terms of the suits, the big stocks in the market have lost a lot. What does that mean for investors who put their money in there?
Yeah, when we talk about the suits, I think as of June there were about 25 of them. Of the figures you mentioned, it is not really. Some of them are still defensive. Like you already mentioned, the loss is broad-based. It affected all the sectors. Going into H2 2026, I think maybe let's wait for the earnings to start coming. This is earnings seasons, and we expected the half year has ended, and we expect them to release their results maybe in July, and that is likely to have an impact.
So according to research Nairametrics made, is it MTN Nigeria? If you look at it, they recorded the largest loss here, 2.1 trillion naira down from the market value. They are standing at 15.12 currently in terms of total market valuation. So is this a good one for, say, the big guys? Should investors to be looking at them as viable stocks to put their money in?
Okay, well, you see, you have to look at this from this angle. Okay. The stocks that are falling, what are the reasons why they are falling, or what are the reasons why they fell? That's a very key point for investors. If the fundamentals are okay, the earnings are okay, they pay dividends, the company pays dividends, but the stock went down, of course, it shouldn't bother you, because like I really mentioned, it could be the issue of demand and supply. Most people are waiting, most people have taken their profit, most people are waiting, moving money for another rebalance, trying to rebalance their portfolio. So that shouldn't bother investors. The most important is that find out the reason why the stocks are falling. In the case of MTN, the data is still sticky, so it's not a problem, because that's one of the characteristics of a stock market.
Okay. So before we move Israel, one word, what would you describe the H1 for you in one word?
In one word, it's been, I would say, interesting and exciting, but particular to stick with one word, volatile. Okay. Right? I'll say it's been volatile, and I'll say let us expect that in 2026, in the second half of 2026 as well.
So we expect more volatility.
Absolutely.
Okay. So Idika, one word, how would you describe each one?
H1, it's so high at this time. It's only in June we had that problem. It hit the peak in May, about 60%, dropped again to 47%. So I would yes, it's volatile, especially in June. In June, that's where we have that high level of volatility. And going into H2, yes, we might still see it in July, maybe a little bit around August, when NN must have been released. So we'll now see what happens. The earnings that won't determine whether we'll continue seeing that volatility or not.
Okay, so we'll just put a peg there and watch and see.
Yes.
Watch and see. So let's just move on to the big story this week that we saw. You mentioned it earlier when you were talking about the reasons why we've seen a lot of losses or declines on the NGX. The FTSE, Russell paused our upgrade to the frontier market, and the reason they gave was the T+1 transition from T+2 to T+1 settlement cycle. Let me just simply break it down here. It seems like, the FTSE Russell, maybe people that don't know, is a global investment. Let's just think of it like a club. Right. We're all there playing our thing, and if we're there, if Nigeria is in there, we get investors, we get money into the country, into the stock market. But right now, we've been put out of this for a long time, say since 2023. And now FTSE says, you're coming right back in, starting September 21 this year. And then the next thing, we go to transition to T+1, and FTSE says, no, hold on a bit. We need to review what you've just done, and we'll probably see if you're worth coming back to the frontier market. What does this mean for investors? Especially, I read an article, and the person described the situation we are in as Nigeria dropping a Ferrari engine into a Peugeot 504 and then wondering why the vehicle won't win races. That made me laugh. Like, this is really funny. The description was really funny. And she said we already passed an exam that was with T+2, and then we went on to rewrite an exam that we had already written, and then we failed it. So talk to us here, Israel. Did we score an own goal here?
No. So I'll say it's too early to call it an own goal, right? And just for the purpose of the audience listening, I mean, for me, I would describe the FTSE Russell as the World Cup. Right, it's like saying for now, the FIFA is saying, you haven't qualified yet, but we'll bring you into the game in September. Right, that's basically what happened. So absolutely, my sense of what's going on is there's a positive side to it, there's a negative side to it. The positive side is Nigeria. I mean, based on my understanding, is the very first country in Africa to be putting forward a foot in terms of saying, we can settle trades and within a business day. So going from T+2 to T+1, right? So we've taken a leap there, a huge leap, and then we are currently seen as one of the
front runners.
Exactly. Thank you for So the FTSE Russell were already saying, we're going to bring you guys back into the frontier market by September, right? And then we then say, we can even do better. We are moving to T+1. That was why they had to then take the position of, we are going to hold on our reclassification, right? And then let's see how the market performs, how the market accepts and reacts to that particular change. So from my understanding, their primary concern is the fact that, again, we are the first country in Africa to be taking that T+1 position, right? So there's a bit of, I would say, scare as to how it will perform, particularly from international investors' perspective, right? I mean, that's foreign investors looking to invest in Nigeria, right? And there is already a time factor gap, right? Say, for instance, Australia is almost 24 hours away from Nigeria. So in terms of, so someone in Australia trying to buy shares in the market, how would that exactly play out from each position, right? We used to be able to settle in T+1, or would the market now say, T+1 isn't working, let's go back to T+2, T+3. So they're trying to see how it will play out. That's why they've taken that position. So I think that's why, again, when you ask for my opinion on what H2 2026 will look like, that's why I said it's still going to be volatile, because now there's even more attention on Nigeria. So if T+1 plays out well, Nigeria then, as I said, is already the first country, so it means that we should be getting even more attractive to foreign investors, right? Looking to invest in the market. Obviously, the brokers and other capital market participants are super happy with the T+1, meaning that there should be more liquidity in the market, so they can liquidate their shares and put that position in another asset class very, very quickly, right? So wonderful. To sort of just close there, I would say my sense is we'll definitely come back to the frontier market by September. I'm also a strong believer in the fact that I believe we will perform well. That's just my opinion, right? And I think we'll sort of win that.
Okay, just hold your thought there. I'll come to Idika. We're just taking a quick break. Capital markets will continue right after. Stay tuned, don't go away. Welcome back. If you just joined us, you're watching Capital Market Live on Channels Television, and we've been talking about the FTSE Russell pausing Nigeria's upgrade to the frontier markets, which has left a lot of people rattled as to would we meet the September 21 window that was given to us, or would we get a different verdict come August, the end of August? We're waiting to see that. But we're still having in the studio Idika Aja, is a senior analyst at Nairametrics, and we also have Israel Adebomi, is the head of investment banking at STL Capital and Advisory. He's still here giving us what we feel about the markets, and very interesting thoughts they've been giving to us. So Idika, I want to ask, so just bouncing off what Israel has said earlier, do you agree with him on what he said about we coming back to the market, that this pause is not a setback but just a breather for the FTSE to review what we've done already?
Partly I agree with him.
If you disagree, please let me know.
No, partly. Yes, there is nothing wrong with T+1. At least it's okay, it's wonderful. But I think we have to look at it from this angle too, what FTSE Russell is saying. They are raising some reservations, and which we have to really work on. The same time frame issue of peculiarities. There are peculiarities here in terms of funding, dollar, chains, with the custodians, with the brokers. They are now saying, okay, fine, we will be able to complete all this transaction within looking at the T+1 scheme we are using, which is a bit difficult if you look at it. That they are saying, okay, if you based on what you have now and what we have done our survey and our research, we don't think you will be able to meet up with it. So we don't want the situation, because the thing now, the situation now is that Nigeria is more or less going to be a de facto pre-funding base. And they are saying, okay, this is likely to affect foreign investors. This is very clear and very simple. I think what we have to really do is to look at how we can improve, like really mentioned our capital market infrastructure, and see how we can now look at those. I know some analysts have been saying, okay, they can go to hell or do this one. No, if someone raises observations, I think it's better you look at those observations and see how we can come in and address this, and that is left for capital market operators to actually look at it. That's the way I see it. Okay, so FTSE, they will decide in August our verdict. What do you see happening? What do you see the NGX, all the regulators
the stakeholders in Nigeria doing before then to be able to ensure that we are still in the running for the frontier upgrade?
Absolutely. So for the regulators, I see them taking more, becoming more aware and staying really close to the market. Particularly, this is a period where the current infrastructure, as my colleague Idika said, would be tested, right? Can the trades be settled within T+1? That's the big question in the room now, right? And then for that to happen, the regulators have.
But there's the FX challenge as well. We've not yet come out fully from that. So is that not a big concern? Especially are the regulators really working closely with the CBN to ensure there's a quick turnaround in FX, and then the investors can actually repatriate their funds as quickly as possible? Because they've had issues in the past, and that was one of the reasons why they removed us. They downgraded us in the first place.
Right, absolutely. I mean, we removed in 2023 to be precise, and that was just when Tinubu, shortly after. We had a regime change, right? And I mean, that was driven. There was so much tightness around FX, right? So that's the big question in the room, which I don't think if any of us could answer that question right now, we'll be trillionaires, right? so we are all just so we're all just speculating, right? And I strongly believe that the market would actually perform well because we are seeing increasing awareness within the market. The regulators are also becoming, super aware and super close to the participants as well. Particularly, and I know we're coming back to this as well, is on a particular change to make the market even more efficient and effective is the repricing of stocks from a valuation perspective, where as opposed to using a one-size-fits-all, now the regulators have classified those stocks into 3 separate buckets, which just came into effect the last month, right? So for me, that's why I still mentioned the markets are going to be volatile, but then I strongly believe they'll be more efficient because we were already doing well, and then now the market is saying we can do better.
Okay, right? So Idika is the US, Canada, Pakistan, they all run T+1. So why is, you mentioned the reasons now, but is there the plumbing? Do we have a problem with our infrastructure? Let's call it the plumbing in Nigeria that is making FTSE Russell still, say, no, let's watch it and see. Because if other countries can do it, why can't Nigeria?
Well, I think it has to do with our peculiarities, like I really mentioned, our infrastructure here. Let me just give you a particular example. Before coming here, I'm not even talking from the regulator. Let me even talk from the angle of the brokers. Before coming in, someone just called me. I've sold my shares and I can't access it. I can't access my funds. You understand? So, and I said, okay, wait. Maybe we'll look at it. Maybe by Monday we'll look at it and see what happens. So normally, if you book a trade like this, after selling, at least you're supposed to have access to your funds. Even the funds should go back to your. If it is online trading, you should go back to your online trading platform where you can now draw that. So these are one of the things that's challenges that we have that are not just open like that. So like I mentioned earlier, it is very, very key and very, very important that we should equally try and address those reservations raised. It's happening, but let us not just ignore them and say that it is not. No,
it's not the issues need to be settled and resolved.
And that is the capital market operators bringing the ecosystem together and see how they can resolve the problem. The problems are there. Don't let our kid.
Let's not sweep it under the carpet and act like it's not happening.
No, it's there.
Definitely. So FTSE is not wrong in what they're
doing.
No, okay, so let's move on to the next one now. We see July 1st, NGX 30 reshuffle. We just want to focus on that. Owando and Trasco, they're out of the NGX 30. So Unilever and Nascon, they're into the NGX 30 index now. Israel, Owando being out of the NGX 30, is it buy or move on mode for Owando right now for investors holding that stock?
I mean, for them to be reclassified, that's already an indication to sort of sell. But I mean, I know Owando really well. Even transfer as well. I mean, everything is pointing towards sell, right? But my advice for market participants is, I mean, if everybody is selling, then shouldn't you take a step back and then try to go the other direction, as opposed to standing by for money. These are stocks that have been having resilience, right? They've been in the market for years, some even decades. So I would say take a pause. My own recommendation is hold, right? I wouldn't also say buy more, whether OTC or wherever, but I would say hold and then see how the market plays out.
Okay, so Idika, same question.
No, I don't agree with him. For like you said, that dropped from the NGX 30 and replaced by NASCON and the Unilever. Of course, if you look at it, the rating is just a matter of the share price and the market cap. So I think Unilever moved up to about 785 billion in market cap. The same thing there. NASCON maybe a little above 400 billion. So they surpassed Transcorp and Wando. In the case of Wando, I think they are trying. They are working something behind the scene. Information available to us. So I think their major problem is their balance sheets. Balance sheet structure, their capital structure. So if they can restructure, they carry a lot of debt, and it's a big problem and disincentive to investors. Then on Transcorp, I think investors should not look at Transcorp just like that. They should look at the components of Transcorp, maybe Transcorp Power, Transcorp Hotel. So those components are doing quite very, very well. So I think for me, Transcorp is a buy for me. And I think I did analysis sometime about 2 months ago, and recommended a buy on it. So I still stand by that. It's a strong buy for me.
Okay.
Yeah,
so let me just lead to Israel. 30 seconds. What stock would you buy for the NGX 30, and which one would you sell? 30 seconds go.
I'll be buying the banking stocks. Because they are defensive stocks.
Okay.
And then they are less, still volatile, but less volatile, but more predictable. Right, so I would want to mention, because I'm also within the financial services space, so I'd rather not advocate for any on live TV. I can tell you that.
Question: do you agree with him?
Yeah, for the banking sector, I agree with him, because one, they have that liquidity, you can easily come in and exit. Then you go to other sectors, look at what we call the price makers and defensive stocks. Of course, you look at the ICT sector, you have MTN, you have Airtel. Then go to the cement manufacturing company. Of course, the three big boys, them, Lafarge, those are price makers. So whatever happens in the system, they can even increase their price to protect their margin. Then coming to agricultural sector, I think I will go with Okumo. Okumo is strong, very, very, very strong.
What of Presco? There's no price change.
Presco has run very, very fast.
Okay, so we'll probably wait for Presco in front. Thank you so much, Idika Israel. Thank you so much for joining us on Capital Markets. Thanks for your insights. Really appreciate them. Thanks for stopping by. And that's why I stop on this edition of Capital Market. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch us again on our YouTube channel. I'm Ibong. See you next week.